Well, wholesale prices rose 0.3% in November.
That increase is more than economists initially projected, and that rise coincides with surging food costs nationwide. The Bureau of Labor Statistics released the Producer Price Index report earlier today, and those hotter than expected numbers put a damper on hopes that inflation would abate this month.
That's right. So let's bring in Bob Elliot for more on this. He is the co-founder, CEO, and chief investment officer at Unlimited. Bob, welcome. Great to have you with us. So for our viewers who may not be overly familiar, what exactly is the Producer Price Index, and what does it signal about the overall health of our economy?
Producer Price Index really gives us a good sense of what the input costs are to a variety of different products in the economy. And so things that are, say, the parts or the various pieces of manufactured goods, or the inputs that typically are necessary for services like food and fuel that then go on to be served at restaurants or fuel airplanes. And so it's an important part of the overall picture because it gives us a sense as to what prices companies are paying for their input costs, which then often they'll pass along to the end prices the consumers face.
Yeah. And Bob, you say the overall picture, part of that is the Consumer Price Index, which is going to be released on Tuesday. Do you expect you'll see a similar rise there?
Well, the Consumer Price Index is basically experiencing sort of two offsetting forces,
right,
which is one where we're seeing slowing goods prices as a result of the end of some of the supply chain issues. And then offsetting that is a rise in various services prices. As anyone knows who's tried to travel or go to a restaurant recently, prices in that area of the economy continue to rise. And so what we're going to see in that CPI report is an offset between those two forces that are playing out right now, probably a bit higher than what we saw last month, given what we saw in the PPI report, and overall just much higher than what the Fed would require given their mandate.
And of course, speaking of the Fed, everybody wants to know what the Federal Reserve is going to do. It's set to make an announcement about interest rates next week. So do you think we're on track for another rate increase, and do you think it's going to be a big one?
The Fed currently is priced to tighten another 50 basis points at the next meeting next week. And that seems pretty much baked given the set of information that we're seeing related to inflation and the continued strength in the labor market. The real question becomes, what are they going to do entering 2023? Are they going to be able to see some easing of inflationary pressures in order to take the foot off the brake a little bit and slow the pace of their tightening? Right now, that doesn't look like it's going to be the case. And so we're likely to see continued Fed rate hikes into the new year, albeit just a bit slower than at a slower pace of hiking than we saw in the back half of this year.
Very interesting stuff. All right, we'll see.
Yeah, Bob, thanks.
Thanks.